to share with you about my stock account. Today my stock account has made a loss about $800, and the SQQ has opened at under 0.737%, and United Natural Gas closed up to 0.06%. Right now we're going to be talking about the market, and the Dow Jones Industrial Average closed up 0.02%, Nasdaq Composite closed up 0.01%, and S&P 500 closed up 0.07%. Overall, very slight adjustments, fluctuations during the day. Today, the auto manufacturers such as Tesla have closed down 3.32%, with dragging down the auto manufacturers index to a loss of 2.26%. Today we're going to be talking about the US economy, and I know we've been talked a lot about that recently, but a report just came out recently saying that the number of corporate who filed bankruptcy has been reaching its highest since the past 2 years, and right now the corporate bankruptcy rate has reached the highest level since the Fed has been raising interest rates. So by the end of August, more than 450 US companies has filed for bankruptcy protection, and they expect, and the research economists expect that this rate to be accelerated towards the future, and which is a very pessimistic view about the US economy, because the businesses are having a less of a profit margin due to inflation and other rise of costs. The fading of the favorable factors such as close to zero interest rate for the cap for over a decade, or other benefits in fiscal policies, will be gradually faded as the macro environment become tighter, and so this wave of bankruptcy and this trend will continue until the US economy reaching its recession in early 2024, as everyone expects. The borrowing cost, right now companies default on their loans because it's largely due to liquidity around sale, because borrowing costs have been soaring, and right now the Fed policy interest rate have been rising to 5.25% to 5.5%, which is a 22-year high, and given that during the pandemic they had government stimulus and other support programs that carried them through the financial hardship, right now they are less of an ability to be independent from that. And the economists also estimate the US non-financial companies earned a record of $171 billion of interest income from their cash, treasury debt, and institutional debt held up, compared to $102 billion from the same period last year. In other words, it means that the credit crunch will cause the struggling chain to collapse. The industries with high profits and strong cash flow will revive as this economy slows, especially when companies are in the best position to pay interest since 1960. Bank of America Global Bank said on Friday that with the Fed's annual interest rate target of 2%, the Fed has no choice but to keep interest rate high for the long term, and the US high-yield bond or junk bonds market will bear the brunt. Last week, the CPI posted an annual rate of 3.7%, the biggest gain in 14 months. Economists have believed that if the CPI have been bouncing up to reaching even 4%, this means it's in a very dangerous zone, that it could lead to a cumulative default of 10% and a significant downgrade of risky CCC-related bonds. and their acceleration of the CPI to 5% could even trigger a greater wave of fall defaults. That's all I have for today. Thank you for listening. Don't subscribe and see you next episode.